Hi everyone, we'll discuss the last chapter of your syllabus, that is account from incomplete records. Here this incomplete records is also known as single entry system of bookkeeping. It completely ignores double entry system of bookkeeping. Then what do you mean by double entry system of bookkeeping? Here every transaction is having twofold aspect, right? It is recorded twice. Here, in case of incomplete records, it follows single entry system of bookkeeping. We'll see the meaning of incomplete records. Accounting records which are not strictly kept according to a double entry system are called as incomplete records. Understand? Here, it completely ignores double entry system of bookkeeping. It is called as incomplete records. Then what do you mean by single entry system of bookkeeping? A single entry system of accounting is a form of bookkeeping in which each of a company's financial transactions are recorded as a single entry. Here the transactions are recorded only once. It does not require formal training and used by the new small business organizations because of its simplicity and cost effectiveness. Here mainly, these incomplete records or single entry system of bookkeepings are recorded only by the small shopkeepers or small business organizations because they are having less transactions and they are identifying the profit or loss in a small size operations. Therefore, they are following single entry system of bookkeeping. Here, this incomplete records or under this system, it is records the transactions of cash and personal accounts. Normally under this system it records the cash and personal accounts of debtors and creditors are properly maintained and it ignores the information relating to assets, liabilities, expenses and revenues. Understand? Here it considers cash and personal accounts of debtors and creditors properly and they are not considering assets, liabilities, expenses, revenues. They are partially recorded, we can say. Next, we'll discuss the features of incomplete records. The first one is, it is an unsystematic method of recording transactions. Here, this type of accounting records or incomplete records are maintained by small shopkeepers. As I said, there is no need of formal training. Understand? There is no need of much knowledge about the recording transactions. They are record the transaction only once. Therefore, they are not following double entry system of bookkeeping. Therefore, it is unsystematic record of transactions. In a large organization, they used to follow double entry system of bookkeeping because they are having lengthy transactions or we can say large number of business transactions. Next one is, generally it records cash transaction and personal transactions and there is no information regarding revenue, gains, expenses or losses and assets and liabilities. Next one is, personal transaction of the owners also recorded in the cash book. Next, different organization maintains records according to their convenience. Based on their convenience, they are recording the transaction and based on their needs, they are recording the transactions. And accounts are not comparable due to lack of uniformity. We can see lack of uniformity in case of these incomplete records. To ascertain profit or loss or for obtaining any other information, necessary figures can be collected only from the original vouchers such as sale invoice or purchase invoice. Thus, dependence on original vouchers is inevitable. The profit or loss for the year cannot be ascertained under this system with a high degree of accuracy as only an estimate of the profit earned or loss incurred can be made. The balance sheet may not reflect the complete and true position of assets and liabilities. Here balance sheet is not reflecting or not showing the exact, complete and true position of the assets and liabilities. Next, we'll discuss what are the reasons for this incomplete records. Here the businessman keep incomplete records because of the following reasons why the businessman adopts or he follows this single entry system of bookkeeping or incomplete records. We'll see. This system can be adopted by the people who do not have the proper knowledge of accounting principles. Here, in case of double entry system of bookkeeping, it is to follow or every accounting transactions are recorded based on the accounting principles, right? We already discussed in the previous chapters. Those businessmen, they are not having the proper knowledge about the accounting records, how to record the transactions. They may go for this incomplete records. Next one is, it is inexpensive mode of maintaining records. Cost involved is very less. Here, as there is no required of specialized accountants. Here, specialized accountants are not appointed by the business organizations. Therefore, it is less costly. Next, time consumed in maintaining records is less. Because it is a single entry system of bookkeeping, only a few books are maintained. The last one is, it is convenient mode of maintaining records as a owner may record only important transactions. Here, what the owner will do? Owner will record only those important transactions according to the need of the business. As we discussed in the features itself, different organization maintains records according to their convenience and needs, and their accounts are not comparable due to lack of uniformity, right? Here it is convenient mode of maintaining records as the owner records only those important transactions according to the needs of the business. Now we'll discuss the limitations of incomplete records. What are the drawbacks involved in these incomplete records? We'll discuss one by one. The first one is, as double entry system is not followed, it is following single entry system of bookkeeping, right? A trial balance cannot be prepared. Here in case of double entry system, it is preparing trial balance and then balance sheet, right? Here in case of this system, the trial balance is not prepared and accuracy of accounts cannot be ensured. The next one is, correct ascertainment and evaluation of financial result of business operations cannot be made. Here, the accuracy level is very less. The owner is recording only important transaction based on the needs of the business, and the balance sheet is not giving true picture about the assets and liabilities. Next one is analysis of profitability. To examine the profit, liquidity level, solvency of the business cannot be done. Here, profitability, liquidity, solvency of the business cannot be done. This may cause a problem in raising the funds from outsiders and planning future business activities. Here it is difficult to ascertain the liquidity or solvency position of the business, and they may not able to raise the capital from outsiders, and they can plan future business activities. It is not easy. It is very difficult to raise the funds in future. The owner face great difficulty in filing an insurance claim with an insurance company in case of loss of inventory by fire or theft. If any risk arises, the owner is able to face a difficulty in filing the insurance claim. So, insurance company in case of loss or inventory by fire or theft arises. Understand? Here in case of any risk arises, owner finds difficult to file claim for these losses. Next one is, it becomes difficult to convince the income tax authorities about the reliability of the computed income. They are preparing the financial statements based on their needs and recording only in important transaction. So they may find difficult to convince the income tax authorities about the reliability of the financial statement prepared, and also about the reliability of computed income. The next one is ascertainment of profit or loss. Here, profit or loss is ascertained by following two methods or two ways. The first one is preparing the statement of affairs as at the beginning and as at the end of the accounting period, called statement of affairs or net worth method. Here, preparation of statement of affairs is done at the beginning and as well as at the end of the accounting period, called as statement of affairs or net worth method. The second one is preparing trading and profit and loss account and balance sheet by putting the accounting records in proper order, called conversion method. Here it is following two methods. The first one is statement of affairs, second one is conversion method. Statement of affairs. We discussed for ascertainment of profit or loss, we used to follow statement of affairs or conversion method. Generally, we are following statement of affairs method only. What do you mean by statement of affairs? Statement of asset and liabilities as at the beginning and at the end of the relevant accounting period are prepared to ascertain the amount of change in the capital during the period is called as statement of affairs. Here, the statement of asset and liabilities as at the beginning and end of the accounting period are prepared just to ascertain the what are the changes in the capital during this period is called as statement of affairs. Here it shows the assets on one side and the liabilities on other side of the, as same in case of balance sheet. The difference between total of the two sides, that is asset and liability side, is a capital. Here the statement of affairs is similar as balance sheet, but it is not as balance sheet because the data is not wholly based on ledger balances, because it follows only single entry system of bookkeeping, right? There is no ledger accounts are prepared. The amount of items like fixed asset, outstanding expenses, bank balance, etc. are ascertained from the relevant documents and physical count. It is a format of statement of affairs. Statement of affairs as at. So in the left hand side liabilities, amount, in the right side assets and amount. So it is similar to balance sheet but not balance sheet because the data is wholly based on, the data is not based on ledger balances. Here in the liability side it includes bills payable, creditors and some adjustment also, like provision for bad debts also, and outstanding expenses. Outstanding expenses in the liability side. Understand, in the liability side what are the items should be appears? Bills payable, creditors, outstanding expenses. Then in the asset side, land and building, machinery, furniture, stock, debtors, cash and bank, and some prepaid expenses that is showed in the adjustment are recorded. Then we have to calculate the total. Both the sides the total should be matched, but here in case of statement of affairs, one side shows more balance and another side shows less balance. Now we have to calculate the total amount, and the difference between these two sides are called as capital, that is balancing figure. Understand? We have to calculate the total of both the sides. If any difference arises, we have to show it as capital, that should be balancing figure. So it is a format of statement of profit or loss. Don't be confused with the statement of affairs and statement of profit or loss. Here it is a format of statement of profit or loss for the year ended. First column is particulars and next amount, rupees. So capital, in the particulars column we have to write the capital, that is capital as at the end of the year, computed from statement of affairs as at the end of the year, capital. Next, for capital add drawings during the year, and we have to deduct or less additional capital introduced during the year. We will get adjusted capital at the end of the year. From this amount we have to deduct capital as at the beginning of the year, computed from statement of affairs at the beginning of the year. Next, we will get profit or loss made during the year. We will understand while solving the problem. Now we'll discuss what is the difference between statement of affairs and balance sheet. The first column is basis of differences. Next one is statement of affairs and next balance sheet. The first basis of difference is reliability. Reliability in the sense quality of being trustworthy, or the degree to which the result of measurement, calculation, specification, understand, accuracy, etc. Reliability. In statement of affairs, it is less reliable as it is prepared from incomplete records. Here in case of balance sheet, it is more reliable as it is prepared from double entry records. Understand? Statement of affairs is based on the single entry system, that is incomplete records, and balance sheet is following double entry system of bookkeeping, right? The second one is objective. The objective of preparing this statement of affairs is to estimate the balance in capital account on a particular date. In case of balance sheet, what is the objective? Preparing balance sheet is to show the true financial position of an entity on a particular date. Balance sheet is prepared to find the true picture or true financial position of the asset and liabilities. The last one is omission. Omission of asset or liabilities cannot be discovered easily. Here, it is not including every information, right? Therefore, omission of asset or liabilities cannot be discovered easily. In case of balance sheet, omission of asset or liabilities can be discovered easily and can be traced from accounting records. Here, in case of balance sheet, we are following double entry system of bookkeeping, and it is having twofold aspect. If we are not recorded properly, the balance sheet is not tallying, right? In case of balance sheet, therefore there is no chance of omission. We can discover this easily. But in case of statement of affairs, only single entry system, only once it is recording, therefore it is very difficult to find the errors and omissions cannot be discovered easily. In statement of affairs, an item of asset or liabilities may get omitted, and this omission may remain unknown because the effect of this omission gets adjusted in the capital account balance and the total of both sides of statement match. However, in case of balance sheet, the possibility of omission of any items is remote, because in case of omission, the balance sheet will not agree and the accountant will trace the missing items from the accounting records. So it is a difference between statement of affairs and balance sheet. Understand? Statement of affairs is following incomplete records, and whereas balance sheet is following double entry system. In this class, we discussed about the incomplete records, its meaning, features, why we have to prepare this incomplete records, what are the limitations and what are the methods of identifying or ascertaining profit or losses, what is statement of affairs and the format of statement of affairs and statement of profit or losses, and finally difference between statement of affairs and balance sheet. In the next class, we'll discuss the problems. Thank you.